Alright guys, welcome to my YouTube channel once again. So my name is Amber Trades. So today I want to show you how I was able to make over $3,000 on my last trade last week. So on my last video, I said something about key levels, how to mark out your key levels when you are trading, because key levels are very important. Alright, if you have not watched my video, the last video I made on directional bias and top analysis, please go and watch the video. It's going to be very helpful. All right, so I made mention of key levels. Key levels are where you are expecting reversals from as a trader. All right, key levels are places where you are expecting reversals from as a trader. On a daily time frame, on a 4-hour time frame, even on a 1-hour time frame, all right, these are your higher time frame. You should expect key levels at each of these time frames when you see an order block at that time frame. All right, so as I was able to make over $3,000 on my last trade, and how was I able to make a $3,000? I'm going to break down everything I did to be able to make that $3,000, and I'm going to share with you guys so that you guys can go as well and implement it on your own trade, and you also have the exact same result. Right? So what I simply did was I came down to my 4-hour time frame. Remember, I said something about top analysis. All right, top analysis will help you to know where your directional bias is and where the market is going to. As you can see, this is the 4-hour time frame, and on the 4-hour time frame, you can see at that very particular point, at that very particular level, at yesterday, the price was just at this level. All right, remember, this point here is a key level. All right, there was a key level just right here. This particular place, the key level, you can see the market rejected from there, came up a little bit, rejected again, came up and rejected again. So at that point, the market is only signaling one thing. It's signaling that the market is on a bearish momentum. All right, that means the market is going to sell down to the next key level. All right, so remember, as a trader, you are trading from key levels to key levels. All right, so the market traded here down to the next key level, which was this particular point. So what was I expecting? I was expecting the market to sell. So how did I catch the sell that made me over $3,000? So remember, I marked out this key level. This particular key level I marked out was because it is a higher time frame key level. A higher time frame key level in a sense that anything that makes the market breaks below this key level, the market is going to come down and retest it and go further. Right? And anything that makes it respect this key level, come down, respect it and continue higher. All right. So now what I marked out was I saw this break of structure to the downside. All right. There was a break of structure here. This break of structure to the downside. And the next thing I was looking for was my liquidity. Remember, my PI is already active. This particular point was my PI. This key level was my PI. Then my liquidity was this equal highs right here. Right? Liquidity was equal highs. You can also call it inducement. Now, this is just to lure some traders to enter for a sell. So what did I do? I understood this liquidity and I waited for the market to come to that very particular POI. And that was why I was able to catch this particular sell to the downside. Remember, these three things should stand out in this particular video you're watching. Your key levels, your liquidity, and your POI. All right. Now, what is the key level? For example, you need to understand where the market is going to. That is very important. You need to know your market structure. That is why I made mention of you doing your top-down analysis. Now, on my top-down analysis, I knew that the moment market broke above this particular zone, the market is going to come back, retest the zone, and continue lower. Right. So that was when the market broke below this particular zone. I was very confident that the next thing I'm going to look for is going to be my liquidity. And where was available liquidity? This point here was my liquidity. This particular equal highs here was my liquidity. Then I waited for the market, came up here. As you can see, the market made a very crazy movement that day. You see this particular week that the market brought out, all right? This was also some kind of inducement for some traders that placed their stop loss just below this other candle right here, all right? So I was able to catch the sell at this particular point and down to this other key level. and I was able to make over $3,000 on this particular trade. So these are the three things that should go with you while watching this video. Number one, mark out your key level. Where is that key level? Where do you want the market to reverse from? Where do you want to see reactions in the market? All right. So after marking out your key levels, number two, you need to find your liquidity, because without liquidity, the market won't be able to move. All right. Then after that, your POI. Now, these are the things I just mentioned right here. You can see this is my key level. This particular order block that is here is my key level. Now this equal highs are my POI, and then this equal highs are my liquidity. Then this is my POI, which I sold from. The market went straight down here, and I was able to make over $3,000 on this particular trade, right? So you can go as well and apply these things I just mentioned right here. Now this is another trade where you can easily take. All right. Now you can see this was a key level. What did the market do? The market broke above the key level, came back, retested a zone right here, came up again, retested at that same particular key level, and it's buying to the upside. So you can see that everything I'm saying here is what I do. All right. You can see this is that particular key level where the market retested from and it's buying to the upside. Now, what you just do is for you to just place your buy tool and you buy to the next key level. Where is the next key level? The next key level is just at this particular eye right here. So what you just do, you just place, you mark out this zone, then that is your next key level. All right, that is your next key level. So just as simple as that. All right. So you go ahead and then also apply these things I just said right here in this video, and you are going to see a very big improvement in your trading. So if you have any questions, if you have anything that has been disturbing you, don't understand, you need me to help you, or if you want to be part of my mentorship class, you can send me a DM or drop a comment section on the comment section, and I'm going to reply to you right away. So guys, if you have not subscribed, make sure you have subscribed to this channel, like and comment, and also share to your fellow traders so they can also learn as well. I will see you guys on the next one. Peace.